Good morning, all participants. On behalf of IRIFM, I extend warm welcome to each one of you for today's session on accounting reforms in Indian Railways. And to take up this session, we have Shri Nageswara Rao, Senior Instructor, IRIFM. Welcome, sir, and it's over to you to commence the session.
Yeah. Thank you, Bernard. Yeah. Good morning, participants. Today's topic is accounting reforms in Indian Railways. This is the burning topic, and this is the latest topic for the last few years. Actually, by this year, accrual accounting has to be implemented in Indian Railways, but some factors, maybe COVID and other factors, resulted delay in the implementation of these accounting reforms. Yeah, we may expect very soon this accounting reforms implementation in Indian Railways. So we'll check what is accounting reforms and what are the constituents. We'll check. Okay. Hope I am audible and the document is visible. The article. Please confirm in the chat box.
Yeah, you're audible.
Yeah.
Just try to move your slide once.
Pardon?
Just try to move your slide.
Yeah, 1 minute.
Yeah, it's moving. Yes, okay.
Okay, right. Thank you. Yeah, see, this accounting reforms we can classify as the ABC of accounting reforms. ABC of accounting reforms means A for accrual accounting, B for outcome budget, C for performance costing. Okay, so we'll go into introduction and we'll go one by one. See, presently the government accounting that is in our India, it is in 3 tiers. That is a union government, states and local bodies. That is a district or panchayati raj. All these 3 types are presently followed the cash-based accounting system. That is quite opposite to accrual accounting. So, what is the source for this accounts maintained is, it is the GFR, General Financial Rules 2017, and other code books, that is Indian Railway Finance Code, Accounts Code, so many codes and manuals. That is the basis for cash-based accounting system right now in the Indian Railways. But it is felt that there is a need for financial reporting to be in sync with the shift in the priorities of the public finance, because there are a lot of changes happened in the public finance side in the worldwide. So our government of India also, it is not in a union. So in order to achieve this, the accounting systems the world over are being revisited, including India. In this direction, in the 2003, one act is passed, that is the FRBM Act, Fiscal Responsibility and Budget Management Act. This is very, very important act in respect of public finance in our government of India. And outcome budget are the first initiatives of the accrual accounting. So one is FRBM Act and another is outcome budget. Both are the first initiatives for implementation of accrual accounting in the government of India as well as Indian Railways. So as of now, it is the rule-based accounting, where our accounting system is based on the rules prescribed by the general financial rules or other codes or manuals. Now it is the time to shift into standards based. Standards based means standards are fixed by this either Indian government accounting standards or this standards issued by the Indian Chartered Accountants Institute of India or world accounting bodies. So many standards. So it is the time for rule based to standard based. That means it is nothing but a change from cash to accrual based system of accounting. In this direction, we'll see what is the finance minister speech in the budget 2016 and 17. As a thriving commercial entity, we also want IR to go a step further and establish an accounting system where outcomes can be tracked to inputs. This is very important. This is the basis for outcome budget. Establish an accounting system, that means accrual accounting system, where outcomes can be tracked to inputs. This is a structural change that forms the bedrock of our transformation, as the right accounting would determine the right costing and hence right pricing and right outcomes. Please see. Right accounting, that means accrual accounting, would determine basis for this right costing, that is performance costing, and hence right pricing. We can price our services, whether it is a passenger services or freight services, correctly. Then the right outcomes, the results also should be good. So we intend taking up its implementation over railways in a mission mode, that is called mission bookkeeping. Mission bookkeeping in the mission mode and complete the entire rollout in next few years. This is what budget speech in the 2016 and 17. Here, IR has initiated several reforms in the area of accounting systems and reporting systems, duly launching the three pilot projects. One is accrual accounting, performance costing, and outcome budget. I already told it is a ABC of accounting reforms. Overall, all three together called as accounting reforms. A for accrual accounting, B for outcome budget, C for performance costing. Okay. Now we check what is accrual accounting one by one. Accrual accounting, before that, we have to check what are the limitations in the cash-basis system. What are the disadvantages or limitations in the cash-basis system? We'll discuss it. Then we will understand this accrual accounting in a better way. Okay. So the limitations in the cash-basis system are P&L account and balance sheet are not as per the format of the commercial accounts. Right now we have prepared Indian Railways is prepared at the end of each year. We have prepared profit and loss account and balance sheet, but these are not as per the format of commercial accounts. The technology used in the financial statements is not understandable to the accountants or outsiders. Even the chartered accountants also, they are unable to understand our terminology used in our railway accounts. And depreciation method is not as per the commercial principles. Asset register is there but not maintained properly. Earnings and expenditure are not accounted as per accounting year concept. How we are accounted? The moment it was received and the moment it was going out, only we are recording. Irrespective of whether it is they are pertain to previous year, current year, or next year, it is immaterial. So that is also one limitation. And outstanding expenditure is not captured in the same year. That means suppose on March 30th, one contractor's bill of 1 crore is pending with the accounts office or executive office. That is, please listen, March 30th of financial year, one contractor's bill of 1 crore is pending with either in the accounts office or executive office. The work is already done. We are already enjoying the results. But payment is not made because of this administrative this one. So what happened? This 1 crore, since it is not paid in the current year, it is not accounted in the current year as per the cash accounting principle. Because as per cash accounting principle, whenever it is paid in the actual only, it is accounted. That means the expenditure relates to current year, but payment is on April 1st or after April 1st, then it is a mismatch. So that is the one limitation. And outstanding expenditure is not captured in the same way, just only cited that example. And no segregation of work in progress and finished works under erstwhile demand number 16. Because if you check this demand number 16 assets, acquisition, replacement and construction, there are a lot of works are going on, ongoing. That means they are all called works in progress, not yet completed. But as of now, there is no segregation. What are the completed works? What are the works in progress? That is also one limitation. Now we check What are the differences between cash accounting and the commercial accrual accounting? That is very, very important to understand accrual accounting properly. A recording. See, in the cash accounting, we record only cash transactions, not credit. But whereas accrual accounting, it is both recording cash as well as credit. That is the theme of accrual accounting. Any prepaid expenses, suppose the expenditure for the next year we have paid current year, or some expenditure is due but not yet paid. Both will not taken into the cash accounting. But whereas it is accrual accounting, it is taken into the P&L account. And accrued income and income received in advance also we are not taken into the cash account. But we should take it into the P&L account when it was in the accrual account. Here, when we recognize the revenue in cash account only when cash is received. But here, accrual accounting, when cash is earned, and it means suppose the sales transaction is happened, but cash is not received. In spite of that, we will record we recognize the revenue in the accrual accounting. But in the cash accounting only, even though sales transaction is happened, but if cash is not received, we will not record in the cash account. At the same time, this recognized expenses, here also when cash has been spent, we are recognizing in the cash accounts. But the moment when they are billed, that is a receipt of invoice or receipt of contractors bill, receipt of suppliers bills, here payment of bills is not important. Once the work is completed or material is received in the railways, the moment they are billed, we should take it into the expenditure in the P&L account in the accrual account. That is important. So bills receivable and bills payable, we should not accounted in the cash accounting, whereas accrual we are accounted. Profit or loss, it is a possible but not accurate in the cash accounting. But here can calculate accurately. So cash accounting, it is suitable for small businesses, that means small shops where the turnover is in the thousands, not having a lot of transactions, only a few purchases and a few sales, where there are limited number of expenses, then it is suitable cash accounting. But this accrual accounting is suitable for the big businesses, where volume of transactions more. And for maintaining this accounts under cash accounting, technical knowledge not at all required. Whereas in the accrual accounting, it must be either the certified accountants or the accountants who qualified this commerce background or chartered accountants only required this maintaining accrual accounts. What about legal position? The law cannot recognize the cash-based accounting. But this accrual accounting, yes, it is recognized by the Companies Act 2013. What is the acceptability? Acceptability of cash accounting is no, because it does not reveal the correct profit or loss. Only it shows the what is the cash on hand, cash in bank. But accrual accounting, yes, acceptability is 100% because it reveals the correct profit or loss and financial position at the end of financial year, that is in the form of balance sheet. That is acceptability. I will tell a small example to understand the difference between cash accounting and accrual accounting. Example, Mr. Venkat commenced a business on 1st March 2021 with a capital of 55,000. Please listen carefully. What is the capital? It is the 55,000 rupees. Suppose he purchased the goods 50,000, that is paying cash, and selling all the goods at an amount of 60,000. Please tell me what is the profit in this transaction? You can message me in the chat box. Yeah, he purchased goods 55,000, but the sales 60,000. Sorry, purchased goods 50,000, sales. Yeah. What is the profit? Yeah, very good. It is a 10,000. Okay, very good. But this business expenses during the month of March, it is 2,000. Now, please tell me what is the net profit? Gross profit is 10,000. What is the net profit? Very good. 8,000 is the profit. But yeah, please stop. Please stop. All are correct. Yeah, 8,000 is correct. Now, please tell me here, please distinguish the difference. He purchased 50,000, that is cash purchases. But sales is credit basis, that means cash is not received. Please understand. And what is cash expenses, that is business expenses paid by cash? 2,000. Now, please tell me what is the cash on hand at the end of the month? Cash on hand at the end of the month. Please remember that sales are credit sales, not cash sales. What is the amount lying with the business at the end of the month? Capital he invested 55,000, purchases 50,000, credit sales 60,000, and business expenses 2,000. Yeah, exactly. Yeah, Pawan is correct answer. Pawan is correct. So Ravish is wrong. Yeah, I repeat the question. See, Mr. Venkat commenced a business with the 55,000 by investing the cash, by infusing the cash as capital. Out of 55,000, he purchased goods 50,000. But he sold all the goods, but on credit basis. That means cash is not received. What is the business expenses? 2,000. Now, what is cash on hand at the end of 31st March? Yeah, Wasim, wrong answer. Yeah, Wasim, wrong answer. Yeah, Priya is right. DL Muhammad is right. Raju, wrong answer. Yeah, Sonia is right answer. So, yeah. Okay. Now tell me, yeah, please. Now he started with the business 55,000. What is the balance as on hand? It is only 3,000. That means he lost 52,000. He got a loss of 52,000 loss because the opening balance of cash in the March 1st it is 55,000, but the closing balance of the cash book is the only 3,000. That means is a loss of 52,000. Please tell me yes or no. Yes. No. Yeah, the correct answer is no. The correct answer is no, because he is not in loss. Because the bills receivable, that means sundry debtors, because the cash credit sales is there, that is nothing but is a debtor to the business or bills payable to the bills receivable to the business. So if we consider the 60,000 to be received, so 60 plus 3,000 balance cash 63,000. 63,000. What is investment? 55,000. What is the profit now? Please tell me now. Because he is having cash balance 3,000 and he is due to receive from the debtors is 60,000. What is the profit? Yeah, very good. Pawan Kriya is correct answer. Ravish, right answer. Yeah, Priya Bhatia, right answer. Yeah, Sonia, right answer. Yeah, yeah, please stop. I'll check it. See this transaction. See here, please check. This is cash basis. This is called cash basis. Now please check. See here, what is the amount invested in the business? 55,000. So whenever it is a received into business, it is plus amount. So cash purchases, that is minus 50,000. But credit sales, so it is not coming to, it is not recorded in the cash basis of accounting. That is the difference. So the 60,000, since it is the credit sales, cannot be recorded in the cash basis accounting. Okay. And what is expenses? Cash expenses by minus 2,000. What is the closing balance? 3,000. Now we'll check this accrual accounting system. Accrual accounting system. See this 55,000, it is a capital shown as the capital and liability side. This 50,000, this purchases, it is shown as the trading account, this debit side. This credit sales, though it is a credit sales, we are taken into the accrual accounting concept as income and it is shown as the trading account credit. So the gross profit is called 10,000. Gross profit is called 10,000. And the expenses we are recorded 2,000 in the P&L account. Then the gross profit 10,000 minus 2,000, it is a net profit is the 8,000. That means here if you check this balance sheet, that is a financial position at the end of the month or at the end of the year. Liabilities, please check. So this is capital 55,000. Whatever profit is earned in the business, it goes to the capital account because it goes to proprietor's account. So capital is 55,000 plus 8,000, it is become 63,000. And what are the assets? Because it is due from the seller. It is due from the purchaser of our goods, that is sundry debtors is 60,000. The cash balance, it is 3,000. So please check here, balance sheet is tallied. That is, capital is now 63,000, sundry debtors 60,000, and cash balance is 3,000. So this is tallied. Okay. Any doubts, please ask me. This is the difference between cash and accrual account. I'll move to next topic. And we will check one example wise what is the difference between cash accounting and accrual accounting. I have taken one example. Received 5,000 as income of the 2021-22. Okay, this is the year of transaction is the 2021, but 21-22 income received in the current year. That means like advance reservation. Advance reservation. During the month of, now we are in the month of March 2022. Suppose April 2022 amount is received in the current month because of advance reservation. Okay. Now, this is the received income in advance, that is 2021. Example, advance reservation. Okay. How it is stated? If it is the cash account, we will post in the current year itself, though it is the next year income, but we are not differentiating whether it is a current year or next year. So we are taking as income in the current year. Suppose if it is the accrual accounting concept, then we will post as this 5,000 rupees as the sundry creditors on the liability side of the balance sheet, because it is not current year income. It is a advance income. That means to that extent we are due to them. So it is like sundry creditors we are posting on the liability side of the balance sheet. But we should take this next year, it is as income. And in next year we are deducted from sundry creditors and we are taking as the income and the expenditure account in the profit and loss account as 5,000. So that is the difference of this advance income. Now we'll check this outstanding contractor's payment. So one contractor bill rupees 1 lakh, it is pending. It is pending in the accounts office in the 2020-21. In cash accounts, we should not record at all because there is no cash outgoing. What is the basis for cash accounting? Only cash outgoing and cash receipts are the basis. Since there is no cash outgoing, we are not recording this 1 lakh in the current year accounts. But in the accrual accounts, here the cash is not important. Whether the expenditure is billed or not. Yes, the expenditure is billed, the bill is received. So we should take this 1 lakh as the expenditure in the current year P&L account. Because the expenditure is incurred, no cash outgo. But that is the reason we show this amount as the outstanding liability. It is the amount we show as the outstanding liability in the balance sheet. And next year, when cash is actually gone out, then we are removing the outstanding liability in the next year. Okay. Now we'll check what are the salient features of this accrual accounting. It follows accounting year concept. It follows accounting year concept. That means all revenues and payments are taken into the account whether the same is realized or paid or immaterial. That means cash is paid or cash is received is immaterial. Whether only the payments are billed or revenues are accounted. That means only sales transactions happened is important. Whether amount received or not is immaterial. At the same time, the suppliers' bills and contractors' bill are billed or not. But payment made in the cash or not is important, not important. And at the same time, whatever payments paid in advance or revenues received in advance, we should not include. That means we should exclude. Because payments paid in advance, that is the next year of payment. We should not take it to the account. And the advance reservation amount that is received in advance, we should not take it to the account. And at the same time, include all expenses, whether they are paid or not. That means all outstanding expenses we should take into the account. All outstanding incomes also, income accrued also, we are taken into the account. For this purpose, in Indian Railways, we are converting financial statements into accrual accounting format from 2014 and 15 onwards, almost 8 years back. Now the P&L account is changed as the statement of income and expenditure. And balance sheet is changed as the statement of financial position because it is not a profit sector. In Indian Railways, we are showing P&L account as the income and expenditure and balance sheet as the statement of financial position. This is very, very important. And in this direction, we are preparing fixed asset register, which is based for opening figures for statement of financial position. That means to prepare balance sheet, we have to know what are the assets and liabilities in opening figures. So for this purpose, for to plot the opening balance of all the assets, we are preparing this FPR. It is undergoing. And for depreciation, we have proposed this straight line method of depreciation is recommended. And we are segregating this capital works in progress from the finished works because that is very important for calculating the depreciation. Otherwise, if not segregated, the depreciation will be calculated based on the total demand number 16, including works in progress and finished products. But charging depreciation on the works in progress is incorrect because we are not getting any revenue since the works are in progress. Okay. So no depreciation for this CWIP, that is capital works in progress. And taking into account all outstanding bills to contractors and suppliers, like right now we are doing this concept for demands payable in the March month salaries. Though March month salaries are paid in the April, we are taking it to the account in the March itself by operating this linked demands payable. So like this, we have to take all contractors bills, supplier bills for work done, for materials received, irrespective of the amounts paid or not, we should take into the current year. And if not paid, we show them as the liability side in the statement of financial. Or like that, advance incomes, that is the reservations in advance, to be deducted from earnings because these are not current year earnings and shown as the liability in the statement of financial position. At the same time, this unrealized earnings should be shown as the profit account and should be shown as the sundry debtors in the asset side. And introducing the cash flow statement, that means how the cash opening balance of the cash closing balance of the last year and cash closing balance of the current year is changed. That is very important to understand the cash movement. So for this, task is given to ICAI ARF. This is Accounting Research Foundation of Institute of Chartered Accountants of India. This is the premier body in the India. 2 pilot projects are launched. One is on Zonal Railways wise Northwestern Railway project, and for production units it is the RCF Kapurthala. For this objective, these changes in the allocations are required. At present, there is no primary need for depreciation. But once accrual accounting is implemented, a separate primary unit is required for depreciation in the finance accounts code value. And there is a need of changing the software, that is IPAS, and approvals from the CNAG and government also is required. Any doubts, please note down. We will discuss at the end of session. Now we will go to outcome budget. Outcome budget. This is the very important initiative in respect of accounting reforms. The outcome budget is the conversion of financial outlays into physical outcomes. The theme of the outcome budget is the conversion of financial outlays into physical outcomes. You can check the table at the end of this article to understand the clear examples of how this conversion of financial outlays into physical outcomes. Now we'll check what is the backdrop. Backdrop is the existing budget system, although involves proper checks and validations at various levels. It depends heavily on the expenditure figures of the previous years. Then we are incremented as per the revised requirements in the next year. That means we have so many balances and checks in the present budget system. But even then, we are depends heavily on the figures. That is, what is the last year expenditure, what is the current year expenditure, what is the next year estimated expenditure. Not outcomes, not results. Say, for example, this POH of the low cost, the demand number 5. So, naturally, we compare the figures. This demand number 5, what is the budget for the, what is the actual for the last year, what is the current year, what is the next year estimated. Only we are checked the amount in crores, but instead of that, if you take the output that is called POH of the locos, how many coaches, how many locos are POH in the last year? How many coaches are POH in the current year? And how many coaches we are projecting to be POH in the next year? That is the important this one. So the present system consisting comparison of expenditure incurred vice versa budget estimates are allotted without estimating the final outcome expected to be achieved. That is the lacking. So, however, in this direction, the performance budget was introduced in the year 1969 following the recommendations of Administrative Reforms Commission. But however, it is not given good outcome. For a long, a need was felt to address the certain weaknesses in the performance budget system, such as a lack of clear relationship between financial and performance budget and inadequate target setting for the ensuing year. So to remove these limitations, now we are introducing this outcome budget in the year 2005 and 6. That is in the Ministry of Finance. First, it was introduced in the Ministry of Finance in the 2005 and 6, almost 15 years back. Okay. Now in Indian Railways, the next year 2006 and 7, it was implemented in the Indian Railways and other ministries also in the next year. Okay. This is the important for MCQ. The outcome budget introduced in the Indian Railways in the year, that is dash means 2006 and 7. And it is applicable for the works valuing 5 crores and above, not for small works. It is applicable for the 5 crores and above. What is simply outcome budget means? We are converting financial outlays into physical outcomes. Converting financial outlays into physical outcomes. It is like a mechanism of checks and balances. Checks and balances, and also it may be called as the progress card. Progress card on what railways have done with the amount assigned in the previous annual budget. Suppose last year the budget allotment is 100 crores. Suppose what is the output? What is the progress card? Like a progress card in the schools. It is also a progress card on railways, this outcome budget. So what is outcome budget? A measures estimated outcome of all government projects and checks whether money has been spent for the purpose it was sanctioned or not. That is the main. How it was implemented method. It is an evolving and dynamic process. The actual physical performance, please remember, it's not financial performance. Physical performance of the previous year, current year, and targeted performance during the next year is analyzed. So instead of analyzing the previous year budget, current year budget, and next year budget, financial figures, we are analyzing actual physical performance. And it is achieved by defining intermediate final outcomes and standardizing unit cost and capacity building for needed efficiency and ensuring regularization and adequate flow of funds. That means we are putting some benchmarks or some targets and we are reviewing the budget whether it is the same is achieved or not. Standardized unit cost means suppose the maintenance of 1 kilometer, what is the standardized unit cost? Suppose maintenance of 1 kilometer, it is 1,000 rupees. So the actual expenditure is compared with the standardized unit cost. What is standardized unit cost? It is assumed it is 1,000 rupees for maintenance of 1 kilometer. So like this. And reviewing every 3 months, benchmarking, effective monitoring and evaluation, and identifying the areas where funds to be reallocated. This is important for reappropriation. Where priorities are identified, then from non-priority areas to priority areas, we have to reappropriate the funds. Yeah, we'll check advantages. Advantages is that the outcome of the projects, not only monetary terms, but also physical outcomes. This is very, very important. And helps management to control expenses, introduce discipline in the expenditure. Control over expenditure is easy by monitoring the projects. And government projects become more result oriented. Instead of wasting the money, the government projects become more result oriented because we are tracking the outcomes. Okay. And reduce cost by identifying projects that do not contribute enough outcomes. So wherever some projects are, we are identified not giving proper returns, we are reducing the expenditure on those projects. And for such inefficiency and other things, we are fixing the accountability. These are the examples of the outcome budget. Please. First example, please check. Earthing of signals to reduce the incidences of failure due to frequent lighting. That is because of lighting, there is a lot of failures happened in the signal failure. So it resulted a lot of this accidents or anything. So to avoid the earthing of signals, what is the activity? What is the cost financial outlay? 30 lakhs. Then we can analyze what is the physical outcomes by installation of one earthing of signal with the cost of 30 lakhs. What is physical outcome? Substantially reduce the rate of signal failure in the section from X to XA. So in one particular section, there is a reducing the signal failures. So what is the result? Because of reducing the signal failure, enhance the throughput of the section in terms of GTKM and ATKM of the freight trains, or in terms of the PKM for the passengers trains. And all these, it is converted into money. All this improved GTKM, NTKM and PKM will be converted into money. That is the outcome. And check the second one, fitment of fuel efficiency kit in the diesel locomotive. By installation of this fuel efficiency kit, the SFC of the particular loco will be improved a lot. SFC, I think, specific fuel consumption. Because right now the fuel budget, it is almost constitutes 20 to 25% of entire ordinary working expenses in Indian Railways. So what is the cost of this fuel efficiency kit? 45 lakhs per kit. So what is the outcome? This is the improved SFC from F to FA section. And what is the result? Saving of HSD oil in liters per month. And this is converted into money, monetary terms. That is how many liters are saved, what is the cost per each liter, then how many, what is the monetary saving in that month. So this is the input, this is the outcome. And third example is the development of goods shed with the state-of-the-art facilities. That means with the advanced facilities, we are developing one goods shed. Goods shed is meant for this using by this freight users for loading and unloading of the goods. So the cost is 50 lakhs. This. Just a minute. So the cost is 50 lakhs. What is the expected outcome? A reduced detention of rake from X to XA or enhanced loading in the tons, and all this is converted into the money per month, financial terms. Next to our last example, road over bridge and road under bridge by removing of this LC gate, manned LC gate. So the cost is 2 crores, 200 lakhs. So what is the outcomes? Elimination of accident at the LC gate. That is the one important. And increase in the maximum train speed. Reduction in the train detention. And increased throughput. Increased GTKM, NTKM and PKM. And enhanced traffic earnings. So all this it is what is the expected revenue per month in the lakhs. So these are the examples of this outcome budget. Now in the last leg of this performance cost. This is the APC of accounting reforms, C for performance cost. The benefits of accounting reforms would accrue to the system by identifying appropriate cost and profit centers and allocating cost to them. That means the main, this one is, we have to identify appropriate cost center and profit center and allocating the expenditure or cost to. So establishment of cost centers, revenue centers, profit centers and investment centers, 4 types of centers is there. A system of control by delegating and locating the responsibility for cost as well as the revenue. That is fixation of the responsibility of the individuals who are in charge of this, all these sectors. Cost center, profit center, revenue, investment. So that means individual means branch officers, senior DE, senior DME, senior DCM, etc. Departments means it is a mechanical, commercial, engineering, electrical levels. So World Bank in the year 1970 emphasized the need to fully develop a system of responsibility accounting on the railways. That means the responsibility is fixed on the individuals or departments or branches. And RCC, this Railway Convention Committee 1971 also commented the accounting and budgetary exercise as a routine and dogmatic exercise undertaken and produced by the bureaucratic elite. That means it, lack of this, what is called outcomes and enthusiasm. So consequently, this committee recommendations is the main base for this accounting classification. What we are followed right now, that is 1/4/1979. The revised accounting classification, still it is following by railways. That is as a result of the recommendations of the Railway Convention Committee 1971. It is synchronizes the accounting and budgetary exercise in a easy way. Now we check the salient features of this performance cost. Here, emphasize division of organization like Indian Railways among different subunits like senior DE or accounts department in such way that each subunit is the responsibility of the manager. Right now, all the branch officers and all the departments are not feeling any responsibility. They are just discharging their duties as per the rules, but they are not felt the overall responsibility. So once this responsibility accounting or this cost center or profit center, investment center, revenue centers are established, Then we can fix the responsibility on the managers, that is the branch officers. And here we can see the cause and effect relationship between managers' decisions and action. Suppose one senior DE has taken a decision. So you can see what is the effect of his decision also. That is cause and effect relationship. So the manager should be held responsible for those activities directly falling under his or her control. So if it is not falling within his, this one, he is not responsible. Only whatever activity is falling under his control, he is the responsible, whether it is a positive or negative. Okay. So for that, what are the prerequisites for introducing this performance costing or responsibility accounting? Here, the area of responsibility and authority of each center should be well defined, and each responsibility center should have a clear set of goals for the manager. We should be set a clear-cut goals for each responsibility center, whether it is a profit center or cost center or revenue center or investment center. We should fix clear-cut of goals, clear set of goals. And the manager should participate in establishment such goals that are going to be achieved. We should be participate directly. And performance reports of each responsibility center should be prepared, highlighting variances. Variances means the differences between benchmark and actual. If it is the favorable, it is called favorable variances. If it is the, suppose the actual cost is more than this benchmark cost or standardized unit cost, it is a negative variance. Unfavorable variance or favorable variance. So each responsibility center has to prepare one performance report. There it is highlighting the variances for items requiring the attention of the manager. In the performance report of responsibility center, the expenses, revenues, profit and investments controlled by the manager should only find a place, not for others. Only whatever expenditure of his unit, whatever earnings of his unit, whatever profit and whatever investments of his control only should be included in the performance report, not others. So what are the basis documents or source documents? Means all of you know it is a CO7, JD or mini receipt. So they should be coded with the specific unit as well as activity. That is, I think all of you know spending unit. Spending unit, if you check in the allocation, there is a 3-digit prefix is there, spending unit in the CO7s and JDs. It is nothing but it is identified the responsibility center. Okay. So that the cost of each unit and activity can be captured for IPAS data. That is spending units. This is very, very important. Responsibility centers are 4 kinds of responsibility centers, 4 segments. This is also important for examination point of view. Please listen. The first one is called cost center, that is expenditure. Cost center. I think all of you know who is spending money, all executives. So here all executives are called as cost center. That may be electrical department, mechanical department or accounts department. Or if it is a branch officer, senior DE, senior DME or senior DFM. So efforts are now on hand to identify small units also. This is in the larger scale. Now, what is the suggestion? We have to identify very small units, that is IOW, PWI or signal inspector. That is the suggestion of the Shri Iqbal committee. What is the committee name? Committee for Identification of Cost Centers and Profit Centers by Shri Iqbal. That is in the broad way, that is senior DME. But under senior DME, so many section engineers is there, so many supervisor staff is there. We have to identify the small unit, if we will say. So it is a cost center is as much as a smaller segment of the area of responsibility for which cost can be accumulated, but only controllable cost only be selected for this purpose. Suppose the employee is working under him, the salary bills of employee, it is not controllable. Only he can control the TA and the other material cost and other repairs cost. But the staff cost, it is a fixed one, we cannot control. Or the rent of the premises, how can a supervisor control? Whether activity is there or not, we have to pay rent, we have to pay the staff salaries. These are all called fixed cost. So variable cost or controllable cost only selected for this purpose and should be included in this cost. So cost center means it is a expenditure type. Like you can identify with the income and expenditure, this is the expenditure. Okay. Now we check the income side. This is the revenue center. Revenue center means all of you know this commercial department or senior DSCM of the division. We can segregate into the various main important cities also. That means Secunderabad, Vijayawada, like that. That is also possible. That means. So this revenue center is responsible for the generating the revenue. That is revenue. The first one is the expenditure. Second one is the revenue center. And now we check the investment center. Investment center, it is the nothing but the construction organization. Under demand number 60. What are the examples? That is a doubling, new line, traffic facilities. So either CAO construction or PCE or CNDN coordination or CNDN of division. They're all the called as investment center. Here, this activity is responsible for both profit and investments because the rate of return is dependent on the investments only. So the objective of the investment center is to maximize the rate of return on the investments. What is the present rate of return? It is the 10%. The CAO means Chief Administrative Officer, construction. It is outside the control of zonal railway. CAO construction is working in division zonal, but it is outside the control of zonal railway. That is not an open line. Okay. Open line, we call it as PCE, Principal Chief Engineer. He is responsible for maintenance of the railway assets, whereas Chief Administrative Officer construction is responsible for creating the infrastructure in the zonal railway. Okay. Now it is the last one is very, very important. Profit center. Profit center right now it is the only zonal railways and Indian railways as a whole. That is the reason we are preparing the operating ratio. Not divisions. Divisions we are preparing performance cost index. So performance efficiency index. So divisions are called as only cost center, whereas zonal railway it is called as profit center. Whether it is a SCR, Western Railway, Central Railway, Southeastern Railway. Here why it is called profit center means an area of responsibility whereof the expenses and revenue pertaining to particular profit center, that is zonal railway, are accumulated. So far, zonal railways are considered as profit center. That is the reason if you check, each zonal railway is prepared profit and loss account and balance sheet at the end of the financial year. But now efforts are there to propose divisions also as a profit center. Right now, the divisions are called as cost center. So now it is that is the one of the recommendations of the Hassan Iqbal committee. So the divisions also should be treated as the profit center. So for this, a pilot project has been implemented. The Hassan Iqbal recommendation as profit center in the Vadodara division in the Western Railway with the help of the Vadodara Railway Staff College, that is now Nayak. Now, with the help of Nair, the Vadodara division is converting from cost center to profit center. But to make a division as a profit center, it is necessary to introduce divisionalization of the apportionment of earnings. Because all of you know right now this apportionment of earnings it is a centralized at the zonal headquarters, not divisionalizing. So if we treat this division as the profit center, it is necessary first divisionalization of the apportionment of, that means all apportionment of earnings should be distributed among the divisions with the due weightage or originating earnings or terminating or transferring divisions. It is an inducement for adopting aggressive marketing strategies. And one more thing is this appropriation to DRF and pension fund also should be segregated among all the divisions in order to calculate this operating ratio of the divisions. So in absence of this apportionment of earnings and appropriation to DRF and pension fund, what we are calculated right now, we are calculated PEI, performance efficiency index, for assessing the efficiency of the divisions. That means they are not full-fledged profit centers. The full-fledged profit center requires, one is divisionalization of apportioned earnings, and another is this appropriation to DRF and pension fund. It is distributed among all divisions. That these are the things required. Yeah, please tell me any queries. Yeah, Mr. Ajay Singh, please tell me. All are unmuted. You can speak.
Accrual account, sir. Accrual accounting is implemented in overall Indian Railways. Accrual accounting is implemented in Indian Railways.
Yeah, it's always disturbing. Will you message me in the chat box or will you tell me once again?
Sir, accrual accounting is implemented in Indian Railways.
Yeah, will you message me, Jason? The voice is disturbing. Yeah, any other queries? Can I ask a few MCQ questions in the chat box? Please check. Yeah, please check chat box and message me answer. What is the committee recommending responsibility centers? Very good. Ajay Singh, correct answer. Yeah, please others. Yeah, Ravish, wrong answer. What is the committee? Name of the committee? One committee is headed by the who? Yeah, Mr. Sanjay Kumar is correct answer. Yeah, Lakshmi Priya is correct answer. This is very important for a MCQ in the new pattern exam. This is very important committee in respect of this accounting reforms. There are very few answers. Okay, second questions. How many centers proposed in under responsibility accounting? And name them. Yeah. And also name. Yeah, Priya Bhatia, revenue. Yeah, one answer is wrong, Priya Bhatia. Three answers are correct. Yeah, Lashipia or yeah, very good. All four right, Lashipia. Ajay Singh, yes, very good. All four right. Sanjay Kumar, yeah, all four right. Sanjay Kumar Naik, very good. Yeah, what about others? Please try. At least message me how many centers are proposed under responsibility account. The answer ABC of accounting reforms. What is ABC of accounting reforms? Please message. What is ABC of accounting reforms? A for what? B for what? C for what? Yeah, Ajay Singh, Lashpriya. Yeah, Lashpriya, the first A is incorrect. Please check. Ajay Singh, yeah, all three are correct. Ravish, all three are correct. Priya Bhatia, yes, all three are correct. Sanjay Kumar, three correct. Very good. Ujjwala, yes, correct. Yes, Lashpriya, now it is A is correct. Yeah, SP Singh, please mention in the full form. No shortcuts. SP Singh, no shortcuts. Yeah, Kameswari, it is a correct answer. Very good. See, these MCQs are very important for a new pattern of examination. Descriptive also very, very important because there are two multi objective type as well as descriptive type is there. Yeah, SPC now, yes, all three are correct. Yeah, very good. Please stop. Yes, Sonia Ahuja is correct. Yeah. Now, outcome budget is introduced in Indian Railways in which year? Very good. Ajay Singh is correct. Yeah, Ravish is correct. SP Singh is correct. Kaveswar is correct. Very good. Very good. See, 1 year after this introduction in the Ministry of Finance. Yeah, Sanjay Kumar Naik, please check. That is wrong. I asked outcome budget introduced in Indian Railways. Yes, Lashpriya is correct. Very good. Yeah, Ujjwala, please check. I am asking Indian Railways, not Ministry of Finance. Ujjwala, please check. Yes, Sonia Ahuja, right. Very good, Sanjay Kumar Naik. Next question. What is the division is taken up as a pilot project under this profit center? As part of this Assembly Committee recommendations, what is the division is taking up as a pilot project? Very good, Sanjay Kumar Naik, correct? Yeah, Ajay Singh, I am asking not accounting reforms. I am not asking accrual accounting. I am asking this responsibility center as profit center. Now, what is a profit center? It is all zonal areas. It is called as profit center. Now, they want to be division also should be a profit center. So, I am asking division. Yeah, only one answer. No, Ravish, I am not asking the accrual accounts implementation. I am asking the implementation of profit center, implementation of division as a profit center. Please check. Yeah, very good. Commerce is correct answer. Can I give hint? Yeah, with the help of Nair. With the help of Nair. Yeah, Lashitya is correct answer. Yeah, Sonia Ahuja, it is a wrong answer. It is only a set example, not answer. But as a pilot project, one division is selected. Okay, the correct answer is Vadodara. Vadodara. Yeah, now implementation of accounting reforms, accrual accounting. The zonal railway is taken as pilot project. Now, what is the zonal railway? Is taking as pilot project. Only zonal railway, please answer. Yes, Ravish is correct. Yeah, very good. Now, you please answer the production unit also. Yeah, very good. Ravish is correct. Kameswar is correct. These are the very, very important for MCQ. Yeah. Very good. Very good. Ajay Singh, Lashitya. I think that is okay. Yeah. Any queries? Please tell me. All are unmuted. Otherwise, we will wind up the session.
MTKM, GTKM, sir.
Pardon?
MTKM, GTKM.
GTK means gross ton kilometer. NTK means net ton kilometer. And PK means passenger kilometer.
Explain GTKM and MTKM.
Example.
Yes.
Example means a ton of the goods carried over 1 kilometer. That is a gross ton kilometer means it includes the weight of the rolling stock. Suppose exclude the rolling stock weight, it is a net ton kilometer. Suppose 10 tons of goods, please listen, 10 tons of goods carried over 100 kilometers. Now, what is NTKM? Please tell me.
100. 100.
1,000.
Okay. 1,000.
Because 10 tons multiplied by 100 kilometers. So that is the NTKM. So our freight performance of freight output is calculated in terms of NTKM, net ton kilometers. GTKM means it includes this rolling stock weight, that is wagons and locomotive weight. Passenger kilometers means a passenger is transported over a 1 kilometer is called 1 pkm. Suppose, please answer. I'll tell one small example. Yeah, all of you seeing the whiteboard?
Yes, sir.
Yes, sir.
The number of passengers, 20. Okay. Distance carried, 150 kilometers. Now tell me, what is PKM? Please message in the chat box. Yeah, very good. SP Singh is correct. Lashit Priya is correct. Yes. Ravish, wrong answer. Amit, the right answer. Ajay Singh, right. Amit Kumar is right. Yeah. It is simple. That is 20 into 150 kilometers. Okay. Now, number of tons. Now, what is LTK? Very simple. Yeah, 6,000 is the correct answer. Yeah. Can I call it a day? Any queries?
Okay.
Now, no more queries. Yeah, I think we can wind up the session.
Okay. For the no queries, then we'll wind up. On behalf of IRIFM Secunderabad, I thank Shri Nageswara Rao for taking the session on accounting reforms in Indian Railways and also explaining doubts, clarifying various doubts. Thank you all. Thank you so much. Please log in at 3 o'clock. We have session on contract tenders and contracts at 3 o'clock. We have session today at 3 p.m. Please, I request all of you to please log in at 3 p.m. Thank you all. Thank you so much.
Yeah, thank you, Vanda. Have a nice day.